Hello, doing problem 9-3A, and going to show you how to do it. So the problem says Crane Company had the following assets on January 1st, 2017, and it gives us a list of our assets. And it says during 2017, each of the assets was removed from service. The machinery was retired on January 1st. The forklift was sold on June 30th for $11,760, and the truck was discarded on December 31st. So the first thing we need to do, well, the goal here is we need to do the journal entries. And so the first one we're going to do is the one that happened first. So on January 1st, we're going to retire the machinery. And this one's actually pretty simple because the machinery lived through its entire life and has zero salvage value. So we're just going to date it as of January 1st, and then we're gonna debit the accumulated depreciation of equipment, $69,580, which is the value of the machinery. And then we're going to credit the asset equipment, the same amount, $69,580, to remove it from the books. Then, after that, we go to when the forklift was sold, which was on June 30th, for $11,760. The first thing we need to do is we need to put the depreciation, because we have it all the way up until December 31st. But now we have about 6 months that need to be accounted for. So we're going to take, for the depreciation, we're going to take the total value of the depreciation, of the forklift, which is $29,400. We're going to times that by 1/5, because it has a useful life of 5 years. So we need to know what 1 year of that is, so 1 and 5. And then we're going to times that by 6 over 12, or 6 months, so that we know what the total value is for that 6-month period that we had it during the year, which equals $2,940. So then in our journal entries, we're going to put our depreciation expense of $2,940, as shown here, and then credit our accumulated depreciation on equipment for $2,940 as well. Now we need to move to the actual sale of the forklift. So first we got $11,760 from the sale. So we're gonna put debit our cash for the cash that we received on that. And then we now need to remove from the books the forklift. So we've got to take the total value of the accumulated depreciation of the equipment, in this case the forklift. And so to find that, we're going to take the $29,400, or the value of the forklift. We had it for 3 years up to this point, or of what we had recorded in accumulated depreciation for the equipment. And so I times the 29,400 by 3/5 for the 3 years, and add the depreciation that we had found so far this year, so the 2,940, which equals $20,580, and that's why we've got that listed here. Now, again, we need to remove the forklift from the book, so we're going to credit the $29,400 from our equipment account. And then we got a gain on this one. Actually, we actually sold it and in essence made a profit for what we initially expected it to happen. So to find that, we first need to know what we've already depreciated. So we're going to take the $29,400, subtract the $20,580, which is the total accumulated depreciation on that equipment, which equals $8,820. And then we're going to take the sale, which was $11,760. That's how much money we made from selling it. Subtract from it the remaining value, which is $8,820, and that leaves over $2,940. And so in essence, we made a gain, or a profit. I guess just a gain, not really a profit, on the disposal of plant assets of $2,940. And that's the end of that journal entry. Now we get to do the truck. So the truck was discarded on December 31st. And so we're going to approach this one just a little bit different. So what happens is, like before, we need to figure out what the depreciation expense, or the journal entry for this year. Now, we discarded it on December 31st, so we basically had it for a whole year. And so we just need to find out what the yearly depreciation value is. And so to do that, we're going to take the value of the truck, $32,736. In this case, we have a salvage value of $2,944. So we need to subtract from the actual cost of the excuse me actual cost of the truck $2,944, which equals $29,792. And then from there we find out our yearly depreciation level. So we take the $29,792 times that by 1/8 because it has an 8-year useful life, and we just need to find the 1 year of that, and that equals $3,724. And since we're representing a whole year here, that's the answer. We just put in the $3,724 for our depreciation expense, and then credit our accumulated depreciation of equipment by the same amount. Then we also retired it, or discarded it, sorry. And so we now need to put that we discarded it. So in this case, we didn't even sell it. So there's no money to be made back or anything like that. So we're going to first debit the accumulated depreciation of equipment. Now to find that, we need to find out how much has been accumulated. So in this case, if you include the year we just did, there's a total of 6 years that we've had the truck. So we're just going to take the yearly amount, the $3,724, and times that by 6 years, and that equals $22,344. And so then we're going to put that as our accumulated depreciation of equipment, or debit it. And then we have a loss on this one, and how we know that is we take the total value of the truck, so the $32,736, and we subtract the current depreciation, which is $22,344, and that equals $10,392, and that's still what we have valued in that truck. And so we're going to put a loss on disposal, because we just got rid of it, of $10,392. And now that it's gone, we need to remove that from our equipment books, and so we're going to take the value of the truck and credit it $32,736. And that's how you do the problem.